Level 1. You are 0. No credit history at all. It's a Friday afternoon, and you are standing in front of an apartment building. You are 23 years old. You have a job that pays $40,000 a year. You have first month's rent in your bank account, last month's rent in your bank account, a security deposit ready to go. You have, for the first time in your life, the financial means to live alone, in a real apartment, in a city you actually want to live in. The leasing agent is a friendly woman in her 30s named Megan. She has shown you the unit. The unit is small. The unit is fine. The unit has a window that looks out at a parking lot, but the parking lot has a tree in it, and you have decided, in the way young people decide things, that the tree is going to be the thing that makes this apartment feel like home. You sit down across from Megan at the small folding table. She slides an application across. You fill it out. She types it into her computer. She frowns at the screen. She types something else. She frowns again. She looks up at you. She is still friendly, but the friendliness has shifted in some small way you cannot quite name. She says, "You don't have any credit." You don't know what to say to this. You assumed the credit check would come back with a number, and the number would either be good or bad. You did not know it could come back with no number at all. She explains, "There is no number because there is no history. You have not had a credit card. You have not had a loan. From the perspective of the system that decides whether you can rent this apartment, you do not exist." You sit with this for a moment. You have, your entire life so far, been a person who existed. You have a name, a social security number, a job, real money in your account, a debit card you have used to buy real things. You assumed all of this was, in some bureaucratic sense, evidence that you were a person who could be trusted to pay rent. It is not evidence. None of it counts. The system does not see your bank account. The system does not see the 4 years you spent at a job before this one, paying your share of rent on time, every month, to a roommate who never had to chase you for it. The system sees nothing. Megan offers you a path forward. A cosigner. 6 months of rent in advance. A larger security deposit. The path forward exists. The path forward is humiliating in a way you did not expect to feel humiliated. You were not, you thought, the kind of person who would need a cosigner at 23. You had a job. You had savings. You had, you thought, done the things responsible people do. You did not, it turns out, do the one thing the system actually cares about. You did not borrow money you did not need in order to prove that you could pay it back, in order to build a small file in a database in a building in Atlanta. You leave the leasing office without a lease. You walk back to your car. You sit in the parking lot for a few minutes before you start the engine. You think about the tree. The tree, which would have been the thing that made the apartment feel like home, will continue being a tree in a parking lot for someone else. This is the first thing nobody tells you about credit. The absence of credit is not the same as the absence of bad credit. The absence is its own category. A bad score is at least information. The system can do something with bad information. The system cannot do anything with no information at all. You, at 0, are not below the floor. You are off the chart entirely. You drive home. You start a credit card application that night. The card you qualify for is a secured card. You put down $200 as the credit limit. You begin, at 23, the slow project of becoming visible to a system you did not choose to be visible to. It will take 6 months before you have a number at all. It will take 3 years before the number is high enough to rent without a cosigner. These are years of your life. The years are non-refundable. Level 2. The number arrives. 540. Officially poor credit, anywhere from 500 to 579. You are 27 now. You did not arrive at this number through carelessness. You arrived through a specific sequence of events that felt, at the time, like reasonable adult life. There was a hospital bill, when you were 24, for an emergency appendectomy. The hospital sent you a bill for $19,000. You did not have $19,000. You had let your insurance lapse during a job change for 2 months. The bill went to collections. The collections account stayed on your file for 7 years. There was a credit card, after the appendectomy, that you used to pay other things while you were paying the hospital. You missed 2 payments during a particularly difficult month. The 2 missed payments stayed on your file for 7 years. There was a car loan with an interest rate that you did not understand at the time was punitively high. The interest rate was punitively high because of the previous 2 events. You paid the car loan on time, every month, for 3 years. The on-time payments helped, but they helped slowly. The damage was already done. You stand in line at a furniture store on a Saturday afternoon. You are buying a couch. You are tired of sitting on the floor of your apartment. You apply for the in-store financing because the financing is advertised as 0% for 12 months. You sit at a small desk with a salesperson while she runs your application. You watch her face. You are getting good at watching faces during applications. You can tell, in the small way the muscles around her eyes shift, that the application is not going well. She prints out a piece of paper. She slides it across the desk. The paper says you have been approved, but not at 0%. The financing terms have been adjusted based on your credit profile. The interest rate is 29%. The monthly payment, after fees, is almost twice what the couch would have cost you in cash. You stare at the paper. You think about telling her you'll just pay cash. You don't have enough cash. You have enough for half. The other half was supposed to come from the financing. But you are tired, in a way you did not anticipate being tired at 27. You are tired of waiting. You are tired of sitting on the floor. You are tired of the small accumulation of the things you have not yet been allowed to have, because of a hospital bill for years ago that you could not have predicted and could not have avoided. You sign the paper. You will pay $1,600 for an $800 couch. This is the second thing nobody tells you about credit. Being below the line is not just about being denied. Being denied is the thing you remember. The thing you don't remember, because it doesn't have a single dramatic moment, is the slow tax that being below the line places on every transaction. The phone plan that requires a deposit. The car insurance that costs 40% more. The apartment that requires the larger deposit. None of these are denials. All of them are penalties. The penalties add up to thousands of dollars per year that you pay, quietly, for the privilege of being seen as risky by a system that does not know you and will never know you. You drive home with the receipt for the couch. You add the numbers in your head. You realize that the actual cost of the appendectomy you had at 24 was not $19,000. The actual cost was $19,000 plus 7 years of inflated interest rates on every transaction you make. The actual cost will be closer to $40,000 by the time the collection account falls off your record. You did not have a choice about the appendectomy. The system charged you for it anyway. Level 3. You are at 640 now. Fair credit. Somewhere between 600 and 679. You are 31. You climbed up here. The climbing was slow. You paid every bill on time, for 4 years, without exception. You let the collections account age out. You opened a second credit card and used it carefully. The number, in response, rose. 10 or 12 points per quarter, with occasional setbacks, until you arrived at 640. You are a person, now, who can do most things. You can rent an apartment without a cosigner. You can get a credit card. You can finance a car. You can apply for a mortgage. All of it comes with conditions and slightly higher rates than your friends with better scores. But the access is there. You sit in a coffee shop on a Sunday morning, looking at houses on your phone. Your spouse is sitting across from you. The houses you are looking at are houses you are practicing on. You are training your eye. You see a house you like. You look at the calculator on the listing. You plug in your number, 640. The mortgage rate is 6.5%. You plug in 820 just to see. The rate is 5.75%. The difference is 0.75%. You do the math. On a $300,000 mortgage over 30 years, 0.75% is, approximately, $50,000 in additional interest. $50,000 over 30 years. You sit with this number for a minute. $50,000 is a year of your salary. $50,000 is a kitchen renovation. $50,000 is your child's first 2 years of college. The $50,000 exists in the gap between 640 and 820. The gap is about 180 points. You have spent 4 years climbing the previous 100. You will need at least 3 more to climb the rest. You decide, sitting in the coffee shop, to buy the house anyway. At 6.5%. With the $50,000 penalty built into the loan over the next 3 decades. This is the third thing nobody tells you about credit. The middle is the worst place to make decisions from. At the bottom, you don't have a choice. The system tells you what you can and cannot do. At the top, the choice is also clear. The terms are the best terms. The middle is where you have a choice, and the choice is always between waiting longer or paying more. There is no right answer. The decision is yours, and the decision is exhausting. and the decision recurs every 6 months for the rest of your life until you finally cross into the top tier. You are not in the top tier. You are at 640. You buy the house at 6.5%. You will think about the missing 75 basis points for the next 30 years. The 75 basis points was the appendectomy. Still, 8 years later. Still, level 4. You are 710 now. Good credit, anywhere from 680 to 749. This is, statistically, the most common range. About a third of Americans are here, plus or minus. You are 38. You are average. You are normal. You are, in the eyes of the system that decides your financial life, a reasonable bet. The change at this level is subtle but real. Things are easier than they used to be. You apply for a credit card, and you are approved instantly. The card has decent rewards. You buy a new car. You finance it through the dealership. The rate they offer you is the rate they advertise on the radio. There is no negotiation about creditworthiness. The salesperson does not look at the screen with any particular expression. The application is approved. The whole transaction takes 40 minutes. You go on vacation. You book the rental car. They do not ask you for additional verification. They do not require a deposit beyond the standard hold. This is the fourth thing nobody tells you about credit. The highest value of good credit is not the rates you get. The highest value is the friction you do not encounter. You do not have conversations about deposits. You do not get printouts that adjust your terms. You do not watch faces shift. You do not stand in the parking lot afterwards thinking about what just happened. This frees up something inside you that you did not know was being used. You realize, around this time, that you used to spend a small but real amount of mental energy every day anticipating the friction. You would think, before you applied for anything, about whether you would be approved. You would calculate, before you walked into a store, whether the financing would be reasonable. You would prepare, before any conversation with any service provider, for the small humiliations that came with being below the line. The preparation was a tax. The tax was paid in attention. The attention was paid out of a finite daily supply that you needed for other things. At 710, the tax goes away. Your daily attention budget grows. You think back to your 23-year-old self, sitting in the parking lot after the apartment denial. You wish you could send a message to that version of you. The message would not be financial advice. The message would just be, you will not always be tired in this specific way. The tired will end. It will end slowly, but it will end. The version of you in the parking lot would not believe the message. The version of you at 38 knows it is true. Level 5. You are 820. Exceptional credit, the top tier, anywhere from 750 to 850. You are 44 now. You did not plan to be here. You did not chase the number. The number arrived, slowly, as a byproduct of 15 years of small disciplines. Pay everything on time. Keep balances low. Don't open new accounts you don't need. Don't close old accounts that have been open for a long time. About 1 in 7 Americans is in this range. You are the 7th person. You are buying a house. The mortgage broker, when he runs your number, smiles in a way that is different from the way the leasing agent smiled at you when you were 23. The leasing agent's smile was a polite mask placed over disappointment. The mortgage broker's smile is genuine. He is not smiling because he likes you. He is smiling because your number is going to make his job easy. You will not pay the 75 basis point penalty that you paid on your first house 15 years ago. You will pay the floor rate. The floor rate is the rate the system reserves for the 7th person. Over the life of this 30-year mortgage, the floor rate will save you about $70,000 compared to a typical buyer with a fair credit score. But the gift is not just the money. The gift is the way the system speaks to you. You apply for things. Things get approved. The approvals come quickly. You are pre-qualified for offers you did not apply for. Banks send you letters with credit limits that would have been unimaginable to your 23-year-old self. The letters say things like, "Congratulations, you have been pre-approved for a $50,000 line of credit." You do not need the line of credit. That is the point. The system offers it because the system has decided you are not risky. This is the 5th thing nobody tells you about credit. The system does not care about you. The system has never cared about you. The system was not designed to be fair. The system was designed to manage risk. At 0, you were unmanageable. At 540, you were a risk that had to be priced. At 640, a risk that could be tolerated. At 710, a risk that was acceptable. At 820, you are no longer a risk. The system does not love you at 820. The system has simply stopped charging you for the assumption that you might fail. The not charging is the entire price. The payoff. So let's pull this together. At 0, you are invisible. The system cannot see you. At 500 to 579, you are a risk. You can do things, but you pay a penalty on every transaction. At 600 to 679, you are tolerated. You have access, but with conditions. At 680 to 749, you are normal. The friction starts to disappear. At 750 to 850, you are not a risk. The system stops charging you. Here is the thing nobody on YouTube will tell you about credit scores. The score is not really about money. The score is about how the system sees you. And how the system sees you determines, in countless small ways, what your daily life feels like. A bad score is not just expensive. A bad score is exhausting. The exhaustion is the part that does not show up in any analysis. The exhaustion is what you feel in the parking lot at 23, in the furniture store at 27, the small clench in your jaw before every application, every conversation with a customer service representative, every transaction that requires your social security number. The good score, on the other hand, is not really about the lower rates. The bigger part is the absence of the clench. The bigger part is the years of your life you do not have to spend, in small minutes here and there, anticipating friction. The friction does not exist at the top. You walk into rooms, and the rooms accept you. This is the actual product the credit score is selling. A relationship to the system. The relationship is either adversarial or cooperative. You do not get to choose which one. The score chooses for you. And the score, unlike most things in life, can actually be improved. Not quickly, not easily, but it can be improved. Pay everything on time. Keep balances low. Do not close old accounts. Do not open new ones you do not need. Wait years. The score will rise. The relationship will shift. The clench will, eventually, go away. If you are watching this video at 23, sitting in a parking lot somewhere, the message is the same one your future self would send. You will not always be tired in this specific way. The tired will end. It will end slowly, but it will end. If you are watching this at 31, in the middle, choosing every 6 months between waiting and paying the penalty, the message is also for you. The middle is the hardest part. Most people give up here. The ones who do not give up are the ones who eventually arrive at 820. The score is just a number. The number is just a way the system decides whether to make your life easier or harder. You can change the number. The number can change your life. Somewhere right now, a 23-year-old is leaving a leasing office without a lease. They are walking to their car. They are sitting in the parking lot, trying to figure out what just happened. They will figure it out. Eventually. The figuring out will take years. But they will get there. The system will let them in. Slowly. One number at a time. If this video changed how you think about your credit score, hit subscribe. Tomorrow we're doing the 7 levels of real estate investing, from your first rental property to a global empire. And it's the level where having an exceptional credit score actually starts to compound into something life-changing. See you then.